Tesla just dropped their Q3 2024 earnings and, well, it was not the monster blowout people were hoping for. Revenue came in at $23.4 billion, only slightly above expectations. Wall Street wanted fireworks, got a sparkler in the rain. Net income, $2.2 billion. Yeah, it's solid, but margins were thinner than last year. Gross margin dropped below 18%, largely blamed on price cuts for the Model 3 and Y. Tesla giveth volume, but it taketh profitability. That's the tug of war here. Elon Musk, during the earnings call, sounded less hype machine, more caution sign. He mentioned stormy economic waters ahead and interest rate headwinds, which is code for people are buying fewer $50,000 cars right now because rent exists. One thing people forget, Tesla isn't just a car company, it's also a bet on autonomy. But full self-driving revenue only grew by a sliver. 5% increase quarter over quarter. For something hyped as the future, it's surprisingly TBA, but one bright spot, energy. The solar and battery storage division posted $1.8 billion in revenue, up 40% from last year. That's not just a side hustle anymore, that's a second act. People sleep on the megapacks until they don't. Still, Wall Street reads Tesla's financials like Bible code. They freaked out more over the slight decline in production than they celebrated the jump in energy storage. Short-term focus will do that. The stock dropped 6% in after-hours trading. Here's the real kicker. Tesla burned $800 million in free cash flow. Not catastrophic, but still the financial version of a, hold up, what's going on here? A big chunk went into ramping up the new Cybertruck, which honestly still looks like a rejected Halo vehicle. And the Cybertruck remains a question mark. Elon called it a logistics nightmare because it needs different parts, new tooling, and even unique cleaning protocols. That's not a red flag, but it's definitely a yellow blinking one at every intersection. Now let's talk gigafactories. Tesla's saying they won't open any new ones in 2025, which basically means expansion is on pause. That's like Apple saying we have enough iPhones. It's weird hearing Tesla say slow down. But here's my view. If Tesla can get margins back over 20% in the next few quarters, even with lower ASPs, average selling prices, they'll be fine. They just need to spend wisely and stop trying to reinvent every wheel and door handle. If you're staring at your portfolio wondering if Tesla's still a growth stock or a car maker with cool tech, here's the truth. It's both. But it's stuck between being a moonshot and a mature company. And that's a weird puberty stage for investors. I'm Scott in Portland, and I'll be honest, I still love the company, but I'm not romantic about the stock. If it's not scaling innovation efficiently, it's just a car company with very cool cup holders, and Wall Street drinks that stuff dry.